of the things that a lot of beginners, probably just don't know. So I wanted to go over some of those things to really break down as much as possible a lot of the questions that you guys have before going to the scanner, and then some of the questions you guys have before getting on Kelton's calls. So basically, I want to take a little time prior to make sure that you guys are understanding, to make sure that you guys are completely set up for success when it comes down to knowing exactly what you should be doing, how much you should be trading, what is the whole math of this, Taylor. So I want to break it down for you as simple as possible. It might take up the whole call, so we might not get to the harmonic scanner today. But if we don't get to the harmonic scanner today, don't worry. I'm doing it again on Thursday. And then that'll be fine. Okay. So if we don't get to the harmonic scanner today, I'll get to Thursday for sure. Or I'll just do the harmonic scanner tomorrow. Either way, we'll get to the harmonic scanner. But some of these things are, well, all of these things are really important for you guys to know prior to trading. Even if something as simple as copy and paste, it's just really good to know. And what I found out is that a lot of the beginners actually, you guys don't just want to copy and paste. You actually want to trade on your own. You actually want to learn the charts. You actually want to understand what's going on. So that's the purpose of this call tonight, is to make sure that you just actually just flat out understand what's going on. What do these numbers mean? What does this all mean? So definitely ask questions in the chat box all throughout the call. It's totally fine. If you don't have a notebook, please grab a notebook. Grab somewhere where you can put this in your notes. I have some stuff typed up already, but I'm going to be typing too while we're talking. Things that I really just want you to remember, and different things that I just know will help you. And you want to have a trading journal. If you don't have a journal specific to trading, specific to the Forex skill set, you definitely want to get one of those, because it'll really help you. So I'm gonna start sharing my screen with you guys. Okay, so the first thing I want to talk about is different trading styles, and also trading attitudes. A lot of people, they're like, Taylor, I've been taking trades in the group chat. I've been losing all week. Taylor, like, I've been taking these trades. I've been trading all kind of stuff. I got $2 in my account. What's going on? So I just want to break down the different type of trading styles, as well as like your trading attitudes. These are going to be very, very, very important to figure out what kind of trader you are. So the first question you want to figure out is, what kind of trader are you? It is basically all based on your emotions, all based on, your thoughts of money, based on what you want to get out of Forex. You really want to think about these things, okay? So there's three main different trading styles, and I'll tell you what trading styles the Retire Rich Signals group chat is, and I'll tell you, just based off of attitudes and what you want to get out of the market, which trading style will probably fit you best. So there's the scalper and the intraday trader. So the scalper, they're not in trades very long, which majority of the signal that you're going to get are basically scalp trades, meaning that you're going to be 10 pips or less. You're going to be in this trade for 30 minutes or less. Some of them are like 10 minutes or less, 5 minutes or less. These are not trades that you're going to be holding for a very long time, okay? Intraday, you might be in a trade for a couple hours. Now, we do have a couple of traders who are in trades for a couple of hours. They may be in trades for 2 or 3 hours, maybe 4 or 5 hours. But before the day is over, they take their profits, okay? So they're not in trades for multiple days, all right? And then the swing trader, this is the person that will hold a trade for a couple of days. A good example that you guys might know of is Orrin Wright. Like, he's so infamous for being a swing trader. He always, like, every single session I got on, he's like, you can't wait 3 days, for a good setup, but, you'll wait 2 weeks for a paycheck. Just wait 3 days. So that's, like, one of his, like, phrases that stick out in my mind. He's, like, a good example of a swing trader. He'll stay in a trade for multiple days and then take his profit, all right? So majority of the signals that you guys are going to get, that you're going to receive in the RR signals chat, majority of them are going to be scalper intraday type trading styles, okay? So That's why we say when you get a signal, you want to take it immediately, like in that first 2 to 5 minutes. Like some of them, you can't even wait 5 minutes. Some of them that's too late, especially if it's an indices, or an exotic. Some of them, they're like, you need to take them in the next 30 seconds. You need to have your alerts on and ready, when Maya drops this trade. Okay, so it's totally, most of them are going to be scalper and intraday. Okay, so the next thing I want to talk about, which is more specific to you guys, is the trading attitudes. All right, so a lot of times as a beginner, the two things that you just want to decide: are you going to take signals from the signal group? Are you going to take signals from the products? Or are you going to take signals from both? Okay, now this is really important because based on your goal, based on what you want to get out of trading, what you want to get out of Forex, and also what type of person you are, is going to dictate where I think that you should take your signals from. All right, and this is just my personal opinion, just based off of talking to different types of people and also taking trades from both. Okay, so when it comes down to the signal groups, now these are the top traders within Retire Rich. All right, so these traders, they're not going to send out signals just for the heck of it. Okay, they're not going to send out signals because it's Monday and it's Tuesday and y'all waiting for signals. All right, they are going to wait for the right setup before they send a signal, because mind you, they are sending signals to a lot of people. I'm going to give you the exact number so you guys don't be so hard on the signal people. They're sending signals to 2,700 people. All right, that's a lot of people. Okay, meaning that if a lot of people win, that's great, you're the hero of the week, Kendrick. But if a lot of people lose, then you have 2,700 people possibly that took that trade and are probably lost some money today. Okay, so they have a very important job, meaning that they're not just going to send signals out for the heck of it. They're going to wait for a good setup. They're going to wait for a good opportunity for you guys to actually take advantage of that trade. All right, so take it easy on the signal people, but that's what they're doing. All right, so if you're going to take signals from the signal groups, which is the RR signals chat as well as the October overflow chat, they may not come every single day. All right, so those may not come every single day. Those may come every now and again, and then some nights you probably like, dang, they done called out 10 trades tonight, right? Like it varies. All right, so depending on what you want, remember, think, what do I want out of this? What is my overall goal? And what type of person am I? All right, so if you're a type of person who's looking for stability, who's looking for consistent trading, who's looking for consistent profits, Taylor, I want 8% on my account every single day. If that's the type of person you are, then the signal group chats may not be completely conducive to what your goal is. All right, so you might want to take a look at the latter, which is the products. All right, so there are different products. The one that I teach on, the one that is the number one product in the company, is obviously the harmonic scanner, right? You could also add on Gold Cup, which is I think $20 a month, which is crazy because you're gonna make way more than $20 using Gold Cup. And you can add on US30, I think, for $10 more, and that makes it $30 a month. And then you also have what's the other one? Levels is another one, and then it's another one. It's on the tip of my tongue. It'll come to me. But those are like additions, right? So these are products. Now, mind you, they aren't people, right? And they're like, this is what I also want to say, is that the signal groups who are led by people, and then the products, which are machines, basically algorithms, equations, adding up, none of them are fall proof. Okay, meaning that you could lose money with either one. All right, nobody's perfect. None of our products are 100%. They are very high though. They're 90%, 80%. All right, so the latter with the products is, this is perfect for the person that wants to make consistent money. They want to make consistent trades. They want to trade multiple times a week. They want to take trades around their schedule. If that's you, then the products are going to be really great for you. Like when people hit me up and they're like, Taylor, man, like they haven't sent out those signals. What's up? I'm like, you can log on to the harmonic scanner and you can get signals all day. You don't have to wait on the signal group chats. You can get on the product. I mean, you can get on the products and you can get signals all day, all the time, right? Bounce back. That's the other product I was thinking of. It's bounce back. So it's levels, bounce back, Gold Cup, swipe trades, Swipe Coin, and Harmonic Scanner. Those are all the ones that I've used before, or that somebody within my family has used and they loved it. So like Bounce Back is really good. I got 2 people who really love Bounce Back. But those are kind of like the 2 different attitudes that you want to think about when it comes down to, okay, should I just take the Signal group chats, or should I just take like from the products? And if you're a person that works crazy hours, or you don't have time to be on your phone all day checking for the Signal group, then use the Harmonic Scanner. Like my girl Danielle, she's on this call right now. I see her name. She places trades on the Harmonic Scanner before she goes to work. She places her pending orders. She goes on about her day, and then she comes back to her phone later. But guess what? Because the Signal group chats weren't working for her. Now, it doesn't mean that the Signal group chat doesn't work. Of course, I've made money using the Signal group chat. But for what she wanted out of trading, for what her goal was, for what she needed in her schedule, the products really work better, especially because she realized, Taylor, I'm not trying to risk crazy amounts of money. I just want to make a consistent amount of money every single day. Now, one thing about the Signal group chats, which is like why it's so amazing and why it's so hype, is because, they're trading exotics, they're trading indices, so you can make $400 in a day, you could make $30 in a day. It's sexy, it's fun. But for what she wanted out of trading, it didn't really fit. And she was utilizing the group chats, but it wasn't working with her schedule and what she wanted to get out of it, right? So now we switched her over to the Harmonic Scanner. We figured out what her trading attitude was, and then we fit it with a style that actually fit what she wanted to get out of it. All right? So that's very, very important. All right, when you're looking at that. Does that make sense? Does anybody have any questions over anything I said so far? All right, so the Signal groups are great. The products are great. People make money utilizing both. People make money utilizing both. You just want to figure out which one is best for you, which one is going to work for you. All right, and it is going to be different for everybody. So what works for me may not work for you. What may work for your best friend may not work for you. All right, but you want to figure out which one it is. All right, so let's go down to next. Now we're going to get a little bit into the numbers. All right, so you really want to take notes on this. One thing that's very important when you're taking a trade, and when you're looking at a trade opportunity, or you're looking at the Harmonic Scanner, or you're looking at a Signal, for example, one thing you want to know is the risk to reward ratio. All right, and the safe one to use is 1 to 2. All right, and I'll tell you guys exactly what this means, and it's really simple. All right, okay, I'm messing up right now. Okay, 1. Perfect. All right, so for example, if you are risking $4, you want, let me actually write risk. If you're risking $4, you want to be in a trade where you can profit $8 or more. All right, that's really good risk to reward, right? A couple times we were on the scanner and I was telling you guys, should I take profit 1 or should I take profit 2? Well, it just totally depends on what the risk to reward is. So if I'm risking 15 bucks and the profit for take profit 1, let's do TP1. And the TP1 is, the profit for that is, let's do $20. That's not a good risk to reward ratio, right? Because I always tell the example, okay, Danielle, if you give me $15, I'll turn it into 20. She'd be like, Taylor, I could go find $5 on the floor. I don't really need you to go and do that, all right? You're not doing nothing major. But if I'm risking 15 bucks and TP2 tells me that I could make 45 bucks, that's great, right? Because that's actually triple. That's actually triple what you're risking. All right, so that's the risk to reward ratio that you want to look at, right? 1 to 2. So when you're using the risk to reward tool that I'm going to show you guys in a second, this is going to come in handy for you. All right, It'll make sense once I show you the actual tool, okay? But just for general thinking, general training, 15 bucks, I want to make 30 or more. 20 bucks, I want to make 40 or more. If I'm risking 80 bucks, I want to make 160 or more. All right? Just simple. Okay? That sound good? And then, of course, how do you know what's a good trade? Just based on your risk to reward. We just basically answered that question that I wrote on here. How do you know what's a good trade? If your reward is, the risk to reward ratio is 1 to 2. That's how you know if it's a good trade for you to take. All right? The next thing is really important. I want to take a little bit of time to explain this because these are questions that I get all the time. How many positions should I have open? How big should my stop loss be? How do I know what my stop loss should be? How much should I be risking? Different questions like that. So I want you guys to write this down. Your risk capital should be 3 to 10%. And I'm going to break this down for you, so just write it down. And basically what this is this just saying like how much of your account are you going to put at risk? Now at 3 to 10%, you could grow your account exponentially at a very good rate at 3 to 10%. All right. So what this looks like is if I have $100 in my account, my risk capital at one time. All right. So at one time, the most I'm risking is $3 to $10. All right. Now, if I'm taking a trade, and if you guys have questions while I'm talking, of course, put them in the chat box, okay? If I'm taking a trade that's 0.01, I'm taking the trade at 0.01 as my lot size, right? That's my lot size. And I know that I'm risking, let's say, 10 pips, all right? Let's say I'm risking 10 pips. Actually, let's say I'm risking 15 pips. I'm risking 15 pips, right? How you calculate what you're actually risking is you want to multiply the pips by by the dollar amount. So at 0.01, that's 10 cents per pip, all right? So let's pull out my calculator. This might be redundant, but I like over explaining, all right? Because some people just, it helps. All right, so if it's redundant, like Taylor, I know how to multiply that. I'm sure you do. I just want to show you on the calculator. All right, so you're going to multiply 15 because that's how many pips your stop loss is. This is just fictional, okay? Totally fictional. But let's say you had a stop loss of 15 pips. You're going to multiply that by 10 cents. That lets me know that I'm risking $1.50. Okay, so stick with me. I'm risking $1.50. This is one trade I took. So I took a signal. It said 0.01. They let me know, I did the calculation. The stop loss is 15 pips, right? So that means I'm risking $1.50. So my entire risk capital is 3 to 10 bucks. So I could probably take TP2, right? Because I only use $1.50 for this trade. So cool, I'm good to go for TP2. So I take TP2, I'm risking another $1.50. Now I'm at $3, right? That's how much I'm risking. Even though I have a different take profit, I'm still risking that same amount. So this is your risk capital, right? Let's say they call another signal. Oh my goodness, we on fire today. They called another signal. Now this signal, I want to take at 0.02. All right, and they said that the stop loss for this signal is 20 pips. All right, that's what they said. So at 0.02 and 20 pips, okay, so let's do 20 pips times 20 cents per pip. Okay, I'm risking $4 with this. So with this trade, I'm risking $4. I want to enter this one too. It looks good. All right. Now, mind you, we already risking $3 up here, and now we're risking $4 more, so that's $7. We're really close to what our max is. Our max is 10. So I'll probably just stick it there because you wanna know why? I'm at $7, and if I take this trade again, I'm gonna be at $11. That's too much for my risk capital. All right. So I really want to keep it between 3 and 10. All right. That's cool. I got 3 positions open. The most that I could lose is $7 in my $100 account. Right. Now I know these are small numbers, and you thinking to yourself, Taylor, like, I'm not excited about no $7. Like, I'm not excited because that means I probably only made 14 to 20 bucks. Yeah, but the next time that you enter a trade, now you're not trading with 100, you're trading with 120, right? You're using proper risk management, right? Because I told you, I said at 0.02, I got $200 in my account, right? Or I have $100 in my account. At 0.01, I only have $100 in my account or less. Okay? So does that make sense, what I explained, everybody, in regards to risk capital, what it should look like, how much you should be risking of your account? I use $100 because that's an easy number. But of course, you can use this same exact thing for whatever amount is in your account. And I'm sure you guys know how to do this, but just 3 to 10%. Find out what 3 to 10% of that number is, all right? So people use 50 bucks. So basically, you're gonna multiply 50 bucks times I think it's 0.03, right? Am I doing this right? Sorry, y'all. I really wasn't that great at math. Okay, so 50 bucks, 3% of 50 bucks. Yeah, it is. 50 times 0.03. So that's $1.50 times 0.1. 50 times 0.50 times 0.1. Okay, perfect. So on a $50 account, you're only gonna risk $1.50 to $5. Okay, $1.50 to $5. Here, I'm gonna type that out for y'all. Most people, they kind of start with $50 account, and I want you to know the exact numbers for that. So your risk capital on a $50 account is $1.50 to $5. Okay. If that makes sense to you, put a 1 in the chat box for me. If this is making sense so far, put a 1 in the chat box for me, just so I know this is making sense to y'all. Perfect. Good. Great. Okay, I'm glad this is making sense to y'all. Because when you're taking multiple positions, when you're using these take profits, you want to make sure that you are keeping your account in balance. Now, I know people play around with the lot sizes. I know people, kind of do whatever they want with the lot sizes. But this is what you have to really realize is that this is not a get rich quick. You want to practice good habits now. A lot of you guys are beginners. You've been involved for a short amount of time. You want to make sure that you're creating good habits, because when you do have a crazy day, or you like, I just want to play with the lot size, you got a good size amount in your account where you can actually play with it. All right, like you got a good size of money in there, but it's because you practice good habits. Obviously the rule of thumb, which I kind of talked over, but I just want to go over just for beginner's sake, is for your lot size, you want to do 0.01 per $100 in your account. All right, 0.01 per $100 when you're choosing your lot size. So 0.02, that means 0.02, 0.01, that means I have 200 bucks in my account. Now, if you have 250, you are still using 0.02 and 0.01, and this is all proper risk management. I know what you guys talk about, but this is proper risk management. All right. Now, how big should my stop loss be? Really, what we suggest is your stop loss be no more than, I believe it's 20 to 25 pips. I don't think it should be bigger than that. Yeah, I think that's the biggest. And actually, you probably want to go lower. So 20. Let's say 20. Okay? 2025. Let's say 2025. Okay? So this is proper risk management. Now, I know you're going to see a lot of crazy things. And you're going to be looking at people's charts. And you're going to be like, oh my God, Taylor, I'm the proper risk police. And they are not doing it right. People are not going to do it right. People are not going to be using proper risk management. Okay, that's just a part of trading. But if you really want to have the mindset that trading is not gambling, okay? Trading is not gambling. All right. So as much lame, like as lame as the proper risk management rules are, you want to make sure that you're not creating gambling habits. Okay. All right. So moving on, I really want to, before I get into that, I want to talk about actual, actually, let's go to beginner pairs. Let's go to that since we're kind of already on that vein. So right now, you guys are taking signals. You're kind of getting in the know of what you should be trading or what does what. These are the beginner pairs, and you want to write these down. These are the pairs that beginners should be trading. These are the pairs that beginners should be studying, and these are the pairs that beginners should be focused on. Okay. Now on your demo account, do whatever you want. Trade whatever you want. Do proper risk management or don't do proper risk management. On your demo account, it'll teach you what will be the difference. Okay. But when it comes down to your live account, these are the pairs that you want to be focused on. All right. Now, a lot of this kind of goes back to trading styles and trading goals, I guess you could say. A lot of the signals that you're going to get might be an indice. You know, US 30 is real popping right now. A lot of people have been taking US 30 signals. And before, actually, no, I'm going to tell you now. US 30, you want to have a significant amount in your account. Nothing too crazy, but you really, like, for proper risk management and to where you're not like crying on your mentor's phone after, you want to have $1,000. Now, if you want to start dabbling and, you know, kind of just jump in there, not the safest, let me type this, not the safest side, but you can start at $500 to $600. Okay, dabbling. But proper risk, like to be completely safe, you want to have about $1,000 in your account. Okay. I know US 30 is amazing. You saw how much money you can make in 30 seconds. But man, I've lost, like, yeah. One time I was trading US 30, I literally lost $300. I kid you not, in like 30 seconds. Like, it was like it literally felt like as soon as I pressed like buy, it was like my money was gone. And it took me out the trade. Okay, so I know that that's a really popular one that a lot of people want to get in. People ask me all the time, like, Taylor, can I take that US 30 signal? And I'm thinking to myself, no, your account is not anywhere near big enough, but you will get there. Okay. Another one that I know that Maya put signals for is a NAS 100 gold. What's another one? Those are like the big ones that I can think of. And there's certain other pairs too. Any pair outside of this one, you guys, especially if it's an exotic or really just the indices, is really what I want to focus on tonight. Okay. You really want to take those on your demo, or if you're going to take them in your live account, like you have an account big enough to do that, you take those in your live account. You really just want to be what's the word? Like, you want to be watchful of that, okay? And you really want to use proper risk management. Like, no joke. You don't want to use anything else but proper risk management when it comes down to that, okay? So these are the beginner pairs that are good for you. They don't move super slow, but they don't move too fast for you. Let's look at the chat. How much should your stop loss be? And how do you manipulate it? So I already said how much your stop loss should be. You want to stay like 20 to 25 pips for a stop loss. How do you manipulate it? So basically, I'm going to show you guys how to do that on the chart in a sec. Then yeah, I'll make sure. And if I don't, just type it again for me. Like, Taylor, don't forget to show us how to manipulate our stop loss. I'm going to show you how to decide that and move that. Okay, so let's go right here. And let's talk about, okay, yeah, let's go here and then we'll go to the chart. So the whole goal, these are the 3 goals that you want to have in trading, okay? These are the 3 things. These are the 3 goals that you want to have. Make sure you write these down. You want to have 1, a small loss, 2, a small win, a big win, 3, or a big win. Okay? Those are your whole goals. Those should be your goals. If you take a loss, you want it to be small. If you take a win, a small win's a good win or a big win, right? What you don't want to do, obviously, what you probably already figured out, is take a big loss. Okay? But this is your whole goal. Remember, a small loss is still a win because it was a small loss. A small win is still a win because you are growing your account slowly but surely, right? A big win is obviously great because more money. All right. Now I want to go over a couple of these because these are not just beginners. Like, these are not trading barriers for just beginners. These are just trading barriers for people in general, people who trade. Okay. So I want to put you on notice about these different barriers that you could have, and put yourself on notice to make sure that you don't have these barriers. All right. So fear of missing out. I feel like a lot of beginners have this. The Forex market is not going anywhere. There will be plenty of trades. There will be plenty of trade setups. There will be plenty of signals as well. You are not missing out on anything. Take your time. Be patient with the market. Be patient with yourself. You will get paid forever from this. All right. And you really want to trust the 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 trading system. And what I mean by that, and I want you guys to write this down, the trend. Oh wait, I'm just typing all crazy. The trend is your friend. All right, the trend is your friend. That's why I told you guys the signal group chats, the people who send out the signals, they know this. They don't care how many times you ask them, are you sending out a signal today? They are waiting for the setup. They're waiting for the trend. They're waiting for the perfect opportunity to get you guys in profit. All right. So don't be fearful of missing out. The trend is your friend. All right. You just want to follow the trend. You want to follow what the market is doing, because you are not going to move that market. Okay. Second thing, fear of losing. Okay. Now, this is where risk capital becomes very important. This is where proper risk management becomes very important. Because a lot of people, they just fear losing. Now, what we do is we suggest all beginners to begin their account with $50 to $100. It's not because that's a cute number. It's because most people are not emotionally attached to 50 to 100 bucks. All right? Meaning that if they lost 50 bucks, it's really not a big deal. All right? So you want to begin your account with whatever amount of money you are not emotionally attached to. All right? Because this is how you're going to be able to trade with a clear mind and a clear heart. All right? Now, trading is 80% mental. 80% mental. Trading is only 20% skill. All right? So you trading with a clear heart and a clear mind is just as important as you learning the skill set. Actually, it's more important than you learning the skill set. Okay? Most times we just psych each other. You psych yourself out. You don't trust your analysis. You don't trust the traders. You don't know what your goal is. You don't know what your plan is. So now you got this fear of losing, and now you losing every single day, right? So you really want to keep that in mind. All right. So whatever your amount is in your account, make sure you're not emotionally attached to it. The reason why people have a fear of loss is because they're trading with money that they can't afford to lose. If you can't afford to lose the money that's in your trading account, then go lower, right? Tess had that conversation with me one day. He was like, Taylor, if you don't want to take trades, like, because I literally wasn't trading for like 2 weeks. He was like, if you don't want to take trades, withdraw the money. Like, literally, like, there's no way for you to take trades, and you don't even want to trade with the money. You have too much in your account. There's a such thing as having too much money in your account. Withdraw that bad boy if it's too much for you. Okay. The third thing is impatient between setups. All right. So that goes with just rushing the market, not understanding that the trend is your friend. And you get impatient. So you think that you saw something and you really didn't see nothing. you just trying to make something up, and so now you lost again. And then the last one, of course, is lack of discipline. Lack of discipline. That's a big one. That's why I told you guys, you're going to see people not using proper risk management. You're going to see people playing around with the lot sizes, and they're going to post their $1,000 days, and they're going to, do crazy amounts of money, and it's going to be great. But, man, I wish I had, like, let me see. Can I take a picture of this? I want to show you guys this picture. I'll take a picture of it. If I didn't, I'll explain it later. Maybe I'll get the picture and I'll show it to you guys on my next call. Let me see. That's the picture. I did not take a picture. Okay, that's fine. But basically, I don't want to explain the picture because I'm probably gonna confuse you. But no, I can. I could talk through it. So I could talk through lack of discipline. So basically, what happens is that people, they come in, they're so excited, they make $700 in a day, right? So what you'll find out is that you're going to learn much more from your losses than you do from your wins. And it's not because we don't want you to win big. We do want you to win big, but you're going to find out much more from your losses than you do from your big wins. So what happens is that people, they make a lot of money in the market, right off bat. They got this insane amount of money, right? So now they either try to duplicate that, or, they more than likely didn't use like proper risk management because they don't know the tools. They haven't learned anything yet, right? So they try to duplicate that, and the market is much different, and they aren't really exactly sure how to read the market. So unfortunately, they may take a small loss, right? So then they're like, oh my goodness, I made $700, but I just lost $400. So now I'm about to double my lot size because on this trade, I'm gonna multiply it even more, right? Like, and I've done this. That's how I know it was true. Like, I've really done this. Like, oh my God, I just lost $200. I gotta get in the trade right now because I need to make $400. Like, basically, I need to make what I lost plus what I just gained, right? So now you have all this pressure, you have all this stuff going on in your mind, and it's clouded. And then what happens is you take one more trade and you're thinking to yourself, you know what, I'm going to risk this like 80% of my account because if it goes in the right direction, I just tripled my entire account. I made all the money back, right? And then you end this trade and you literally deplete your entire account. Remember the US 30 trade I told you guys about? That was me, literally. Like, literally, that's what happens. So discipline is very, very important, right? Because this is literally this is not gambling, okay? I know it may feel like gambling with the amount of money that you can make, with the amount of success that is around you, because it's a very powerful market, but this is not gambling, okay? So discipline is going to be very important, as well as your self-development. You absolutely need to read books. You absolutely need to listen to audio tapes. You absolutely need to do something, some sort of routine in the morning. Everybody's different. I believe in God, so I pray. I listen to a sermon, whatever it is, to make sure that your mind is clear, to make sure your heart is clear, even if you're copying and pasting, okay? Just get into the flow of things, because like I said, trading is 80% mental, 20% skill, all right? 80% mental, meaning how you feel, what you're thinking. You want to know why that's so big, especially when you start looking for charts on your own, is because you are an indicator. You are a signal. So if your mind is all cloudy, or you're stressed out, or you're thinking, man, I hope this trade wins because I got to pay rent, don't trade like that. Don't trade like that. It's too much pressure. Literally, I just took a class with one of our great friends. He makes a lot of money. Okay, he's 22. But he literally just did a trading class with him, and literally, the color of his charts, like we asked him, like, why is your chart that color? And basically, he was just like, psychology, like your brain likes certain colors. Like, that's how serious, mental is. Like, that's how important mental is to trading. Like, he literally changed the colors of his chart so his brain would only like understand good. Like, it would only understand good things, even when it's going down, or even when it's, it was crazy. But that's how important mental, like, self-development, that's how important it is to the trading skill set. All right, so I know you're copying and pasting, but as you're learning, like, to look at the charts on your own, you definitely want to start spending a little bit more time on your mental. All right. Next thing, I got about like 20 minutes left. We're probably not going to get to the scanner today, but no worries. There's scanner recording calls, as well as I'm going to do it again this week. So last thing I want to talk about, and I'm going to get to the chart on here, is a couple things that I feel like are really good for traders to just understand. Is one, candlesticks. So I'm going to talk about the anatomy of a candle. What does it mean exactly? What do they signify? And then also top-down analysis intro. Somebody who does a great explanation of top-down, I would probably say is Christopher Derrick, Orrin Wright, any of these people, really. So let's look at a candlestick, because I want to explain to you guys what these candlesticks exactly mean. So if you don't know what the different time frames are, they're 4 hours, 3 hours, 1 day, 1 week, 1 month, 45 minutes, 30 minutes, 15 minutes, right? So every candle, so let's look at a 1 day. Okay, yeah, we're already on 1 day. So every candle is 1 day. Every candle is 1 day. All right. Now if I go to a 4-hour chart, every candle is going to be 4 hours. All right. So let's zoom into a candle. And this is also in your academy. I just want to break it down for you. All right. So at this candle, this green candle, this means that it bought, it went up, it rose. All right. So this right here at the top of this wick, which is this line, this is the highest point that this that price was at on this candle. This is the lowest point that price was at on this candle. This is where it opened. So this is what price it opened at. So when this candle first started forming, this is where it was, and this is where it closed. All right. So this is the highest point that price got. This is the lowest point that price got. This is where price started, and this is where price ended. All right. That's what a candle tells you. Now let's do a selling candle. So this is red, which means it's selling and went down. This is the lowest, right, that price got to. This is the highest that price got to. This is where it opened, and this is where it closed, right? And the easy way to tell, like if you're confused on the anatomy of the candle, is if it's selling, that means that it went down, right? So that means it started up here and it went down, all right? So that's the anatomy of a candle, right? That's what the candle means. Now, for a 4-hour candle, right, that means, so let me do this really quick, 1 sec. Because literally this was explained to me and I literally thought I was a genius. I was like, I'm a freaking genius. And I am a trade expert. Okay, here we go. So this candle that we were just talking about, you guys, is 4 hours, right? Let's make it a different color. Okay, let's do that. So this candle's 4 hours, right? So when I go to the 1 hour chart, this same candle, hold on, there we go, breaks down to multiple candles, right? Because in a 4 hour, for every 4 hour candle, there's 4 1 hour candles, right? So if one candle is 4 hours, right, that means that on the 1 hour chart, oh wait, let me actually go back because I want to break this down. So the 4 hour, where's that candle at? Here we go. So you guys see that this was a green candle, meaning that it bought, right? So if I'm on a 4 hour, that means that on the 1 hour time frame that this is an uptrend. How do I know this? Because this candle is going up. It bought. So that means when I break down this 4 hour candle to 1 hour, whatever the candles are, I know that they're buying. Hold on. Sorry. And look at that. So this is the same 4 hour candle that we looked at. It's just broken down into more detail because we went to the 1 hour chart, right? And like I told you, it bought, right? So in this 1 hour, 1, 2, 3, 4, in this time frame, it bought, right? It went up. So when I go to the 4 hour time frame, the same place that I highlighted, guess what? It bought. So I just wanted to show you guys that so you could understand how these different time frames are related. Like, they're not best friends. They're like cousins, all right? They're actually like siblings, all right? So this works on all the charts, all right? So this one candle is basically an overview of what happened on the 1 hour chart, right? Now check this out. We'll go even deeper. So this is the 1 hour chart, and this is going to give me some detail as to what was going on. Now if we go to the, let's go to the 30-minute chart, it's going to give us even more detail, right? But as you can see, it bought, right? So that's how these charts are actually kind of related to each other and what these candles actually mean. Like, what is the chart telling me? What is it talking to me about, right? Now, last thing I want to go over before we get off is market structure. You guys are going to learn a lot about different patterns. You're going to learn about all these indicators. You're going to, yes, buy is going up and sell is going down. Yes, so buy up, sell down. So you guys are going to learn about a lot of indicators. You're going to learn about all these trading styles. You're going to learn about all these cool RMAs, EMAs, momentum, SK5. You're going to learn all this crazy stuff, right? But at the end of it, I want you to realize it's all market structure. Everything that you're going to learn about trading is market structure, meaning that it's an uptrend, a downtrend, or consolidation, all right? Everything, all right? Double top, double bottom, candlestick patterns, all this, you guys, is just market structure. So if you understand market structure, you'll be able to understand anything, all right? So don't get confused about all these charts and all these drawings and all these patterns. And it's beautiful. Well, I love Oren Wright. He keeps it so real. Like, I'm not interested in drawing, okay? This is not art class. I'm trying to make money, right? So one thing you want to remember, because you are going to find some indicators that you might like. You might like drawing fibs. You might like, you know, different indicators, you know, different strategies, and that's great. But always remember, everything is just market structure. Everything breaks down to uptrend, downtrend, or consolidation. Everything breaks down to that, all right? So really quick, let's look at this. This is Euro USD, and let's actually look at it on the day chart. All right, so this right here, let me actually draw it. This tells me that this is what? Put it in the chat box. What is this? Is this an uptrend, a downtrend, or consolidation? Is this an uptrend, a downtrend, or consolidation? You guys let me know. Perfect, Marzo. A downtrend. It's a downtrend. And this is why. All right? Everything is this, you guys. This is how I'm going down. So we're starting up here. This is the lower high. This is the lower low. Now we got a lower high. This is another lower low. Lower high, lower low, lower high, lower low, lower high, lower low. Right? Let's move over here. Tell me in the chat box what this is. Right here. What is this? Is this a downtrend or an uptrend? Exactly, Marcel, an uptrend. How do I know this? Higher high, higher low, higher high, higher low, higher high, higher low. So these bottoms are higher lows. And the reason why they're called higher lows is because they're low and they keep going higher, right? The reason why they're higher highs is because they're high and they keep going higher than the last one. So this one's higher than that one. This one's higher than that one. This one's higher than that one. All right? Over here, this one is the lower high. The next high is lower than this one. The next high is lower than this one. The next high is lower than this one. All right? So if you're looking at the day chart and you know that it's on a downtrend, regardless of what's going on the 4-hour chart or the 1-hour chart, you know that the overall market structure is a downtrend. Of course, there's going to be some uptrends. There's going to be some complex uptrends up in there. But if you know on the day chart, it's going down. It's selling, right? So the only thing, because remember, the day chart is only made up of the 4-hour candles. The 4-hour candle is only made up of the 1-hour candle. So if the 4-hour is on a downtrend, that means that on the 1-hour is on a downtrend too, right? They're not separate charts. They're just different time frames. So if you know that it's on a downtrend on the 4-hour chart, right, you can know that if you're looking at the 1-hour chart, you cannot, like, sometimes people get faked out, right? Because they think it's a buy or they think it's going to go up and up and up. But if they knew, like, oh, overall market structure, the market is in a downtrend. That means that it's going to sell. It's going to keep selling. Yeah, we might buy here, but it's going to keep on selling because it's in a downtrend. All right. So last couple of minutes, because I want to make sure I talk about stop loss. Thank you, Daniel. Perfect. We're all going to start using this tool right here. And this is basically to calculate your stop loss and your risk to reward, right? So I'm going to actually do the next harmonic scanner training. I'm going to actually use this tool. I usually use the ruler, but we're all going to start using this tool right here. So really simple. Perfect. So here we have the short position. And basically on a short, you're going to use the short position for a sell. And you're going to use the long position for a buy. All right. So if you're going to enter into a buy, you're going to use this one to calculate your risk to reward. And if you're in a sell, you're going to use this one to calculate your risk to reward. All right. So really simply, let me actually move this down. So how this works, it's a cool little tool. Basically where you enter, you're going to put this. So let's do this right here. If I was in this for a, actually let's do it for a sale. Let's do this one. So if I was in this for a sale, let's say I want to catch this sale right here, I would probably more than likely enter for this sale right here. And right here, you can see this right here is utilizing, you know, is calculating, is telling you how many pips apart everything is, Danielle. So this is how you're going to manipulate it. You're going to move your stop loss and everything, and it's going to turn red, obviously, when this is not good, right? So this is not a good risk to reward. So stop loss right here, this tells me that this is 15 pips, all right? This is 15 pips. There is a chart in the Welcome to October Overflow chat that breaks down how to calculate pips and what this looks like. But this is 15 pips, so this is within our stop loss, right? The reason why it's going to be turning red is because obviously you're going to have some drawdown, so you want to give yourself a little bit of room, you know. And you want to make sure, like, if you enter, you want your stop loss, once again, you guys, 20 to 25 pips at max, all right? You shouldn't be in a trade where the stop loss is 50 pips or stop loss is 100 pips, all right? Not right now, all right? Or ever, really. I wouldn't even suggest that ever, all right? And then the same thing for your reward, for how much you want to make, right? This is 46 pips. So if I'm risking 16 pips and I can make 46, that's good. If I'm risking 16 pips and I can make 35 pips, that's good too, right? And then obviously how you would get that number, like what is that price, what is that at, you would just draw a line, or you could just use, you know, your cursor, and it'll tell you the price right over here on this bar on the right hand side. Okay, I'll go more in depth of how to use this tool exactly on the harmonic scanner either tomorrow or Thursday. I'm gonna see if Kelson's gonna do the call tomorrow. If Kelson doesn't do the call tomorrow, I'll do it, and I'll actually show you guys how to use this on the scanner, the same way that we were utilizing the scanner last time. I just don't have enough time to do it for you guys tonight. Otherwise, I would. But if this was helpful for you guys, I want you to put a 1 in the chat box if this was helpful, if this made sense to you, the breakdown of everything. I did record this call, so you guys can go back and watch this and retake your notes if you didn't take them. You can come back and watch this. Tomorrow or Thursday, I'll be going over the harmonic scanner, and I'm going to be using everything we talked about today on the harmonic scanner tomorrow or Thursday. Okay, so come back Thursday. I'll announce it in the chat. if I'm going to be doing it tomorrow or Thursday, okay? So come back tomorrow or Thursday, and I'm going to apply everything that we talked about tonight, and I'm going to apply it to the scanner, all right? And then it'll easily apply to Kelton's trainings, because he's actually going to be looking at charts with you. He's going to be going over beginner trading strategies with you. I'm just kind of teaching you guys the copy and paste beginner stuff, all right? So I hope this was helpful. I'm going to probably be doing more of these type of calls because you guys kind of know how to use the scanner at this point. So I'll probably be doing a little bit more of these calls as well, where we actually talk about just the basics, all right? Just the thinking through, the talking through it. I got to kick y'all off because, you know, the op call starts at 9. I'm going to post the recorded video, Kelly, in the October Overflow group chat, as well as in the Welcome to October Overflow group chat, all right? So I got to kick y'all out.